Hello, my name is Bobby Jones, and I'm a retired nurse anesthetist turned apartment and alternative investor. I'm also the founder of On Call Capital, an equity firm that seeks to educate fellow healthcare providers and working professionals about alternative investing while also providing you with opportunities to do so. Now, whenever I'm thinking about a particular investment, I like to make a list of pros and cons to keep things straight in my head. But I think it's important to do this when you're first starting out with any venture that you want to take on. On a broader scale, I just like going over the good and bad of an idea in general first. So I wanted to do this with the concept of investing in industrial real estate. If you didn't already know, industrial real estate has been one of the top real estate performers over the past several years. And it also has greater investment and development prospects in 2022 than both single family homes and multifamily projects. Yes, there are different niches within this space, such as flex and office space, light manufacturing, food manufacturing, temperature controlled facilities, and warehouses. Each has their own unique profile. So I would encourage you to do more research regarding any individual investment that you're interested in. But here is just a broad overview of some of the pros and cons of industrial real estate. Pro, demand is on the rise. The US may need more than 1 billion square feet of additional warehouse space by 2025 in order to support fast growing e commerce demand. This suggests that there will be more expansion and development opportunities on the horizon. Con, tenant risk. While one consistent tenant is definitely a plus, there are some downsides. If that particular tenant runs into trouble and they can't make their rent, the investors still have to meet those debt obligations. Unlike multifamily, most industrial spaces only have a few tenants, so a single vacancy can result in an outsized loss in income. Pro, longer rental terms. Industrial leases are commonly between 3 to 10 years, but some can be as long as 25 years. You deal with businesses rather than homeowners, so it's just a different animal altogether. Longer leases implies that businesses are not as likely to change locations often, and this can result in stable and passive income for years on end. Con, long-term vacancy risk. After a completed lease is up and a tenant moves out, it can take a long time to get another tenant in place. This is especially true for manufacturing space, where a significant amount of capital may be necessary to make a property usable for other tenants with different business types. Pro, e-commerce, baby. One reason for the boom in industrial real estate is the massive growth in online purchases. In 2020 alone, online purchases grew by 46%. Amazon and other e-commerce fulfillment companies are responsible for roughly 40% of all industrial leases. This trend has led to high demand for warehouse and distribution space all over the US, with many retail space conversions also happening to meet that demand. Tech companies also need more server farms for online commerce, and this provides another avenue for long term revenue. Next con is oversupply risk. The future demand for warehouse space is resulting in many real estate investors only building fulfillment centers. Online business is booming after all, so it makes sense. But if too much of this particular property type is built, it could significantly impact occupancy and rental rates while also reducing property values. Our next pro, lower maintenance. Industrial properties don't require as much upkeep as other commercial property types. Most, but not all leases are triple net leases, which means that maintenance isn't the owner's responsibility. Coupled with longer lease terms, this just translates into less renovation needs overall for owners. Our next con is that there isn't much flipping in this space. The long term nature of the industrial space means that there just aren't as many opportunities to come in and fix and flip as there are in other real estate types. Pro, variety. As mentioned earlier, industrial real estate has several different property types. Industrial buildings are typically leased empty, meaning that businesses can rent the building and then set up their own processes and equipment with plenty of flexibility to do so. This is very different from residential real estate, where you're kind of stuck with what you buy from a structural standpoint. Our last con is less availability. There are just fewer industrial buildings for sale versus traditional single family homes. That means that you need much more research in specific markets to mitigate your risk. And you may face competition when you finally find that right property. Now, pro is that there's investment stability. Let's say that again. There is investment stability. Industrial real estate tends to be more recession proof than other property types, as the properties themselves tend to hold value and appreciate over time. Our last pro is, of course, tax benefits. Yes, industrial real estate is depreciable, just like any other type of commercial real estate. This can add up to thousands of dollars in savings for owners and investors alike. Now, I hope this video helps you out in your investment journey. And that's going to do it for our list today. If you found this information helpful, please give me a thumbs up and subscribe to my channel. If you have questions or comments about the video, please feel free to comment below. If you're interested in getting access to passive real estate investment opportunities, reach out to me here or on Facebook, LinkedIn, or Instagram, or you can visit my website at www.oncallinvestments.com. Thanks for listening and watching, and I'll see you on that next video.